All right. I actually did a video and it didn't upload right. I did like 15 minutes. So I'm gonna take my time and do another one. And we're starting off with the indexes. We always start with the indexes and we do some, maybe we'll do some sector analysis, but usually I go into individual names. There's a reason why I do that. The reason why is because if the markets indexes are moving down, majority of all this what's within the index is going to move down as well. Now that might seem like Captain Obvious stuff to everybody, but if you don't start with the market analysis on the upside or what's going on with the index, do you think that all the fundamentals for all the stocks have moved in sync? So everything is gone down because everything was supposed to go down, or it's because basically I look at the as the index is the tide, you look at the sector as the ripple, and the trickle is just the stock. It's not the other way around. So some people say, oh, well, Apple's lifting the NASDAQ and stuff. The NASDAQ's moving up, and Apple's a component of it. But if the NASDAQ goes down, it'll go down, at the end of the day. So, what I'm showing right here is just in the Dow Jones, we're looking at pretty much um, the rising wedge breaking down with a lower high. I wanted to kind of really show that and see that we have to really be careful of what's going on, but we still see that we have this trading channel that we're in, and it's kind of wide, but when you put it on even if you put it on the monthly, you could see that this trading channel has been going on pretty much from last year this time. So, um, but we have to be cautious because we're under the 10 and we had a lower high. So if it breaks below this and breaks below that 50, um, we could see some movement to the downside. Now let's measure out what the actual tracement is, and it's only 1.5%. But it's still giving you the price action and the patterns, and that's why us as technicians use this to kind of say there's something significant with that, and we want to see at least a recapture of that 16,000 level. That's a huge, significant psychological level, and we really have to be aware of that. S&P 500 pretty much has the same thing, rising wedge and the lower high. We're getting right back to this level of about 1778, 1775, and we have to see if that level is going to hold. Again, on the weekly, still looks good per se, but again, I was talking about the hanging man yesterday. I don't really look at them like that. I'm just looking at the significance of, is it going to be able to punch up or is it going to break down? We'll see if the hanging man is actually true. I look at it as one of the Japanese candlesticks I don't really look at too much, because if it breaks above this level, then that just means that the bulls ran it up and punched it up. So let's see what happens in this range. So we want to be aware of that. We have the composite. Composite we see is on the weekly, it's clear uptrend, but we do have a break of the 10, and we're approaching this level looking to close above this last previous pivot point. So we have to be very cautious and see if it's going to continue to follow through and then test the bottom of this channel. Once we get in that channel, you don't want to guess direction. You just want to see how it plays out, and you don't have to be the first one out the foxhole at the end of the day. The Russell, you see we have the lower highs, pretty much almost the exact same thing, but this up channel is looking good, and it's almost testing. Now the 50 has been tested 1, 2, 3, 4, 5, 6 times. So we'll see if it's going to hold. Just because it tested all those times and pop back up doesn't mean it's going to happen this time, but we want to be aware of it and move forward. Tesla, I'm in. Yeah, so I'm stopped out of this one. I want to see if it gets back above the 50, and we'll go from there. I tightened up my stops because I kind of really kind of gambled on this one. I should have waited until above the 50 to get in, but it's all right. I took a calculated risk, and that's trading. And that's something that a lot of people don't want to hear, is that your stops are to show you or to tell yourself that you are not bigger than the market. And some people are like, I don't want to hear that. Just go to doing the stocks. I don't really want to hear about all that preaching stuff. Well, there's a saying in Jamaica: who can't hear must feel. And you kind of get the gist of it. So the stops are there for you to preserve your capital to live another day. Apple, again, is trading sideways, so let's see where it's going to pop. If it pops above here, gives some price action above these levels, then we could continue to the upside. Google's just giving a little rest right now. It looks pretty good. Facebook has some after hour index shifting moves, and it's supposed to be up 4%. We'll see what happens in the morning. I'm in this trade, so we'll see what happens. I got in a break above here, so we'll see what it looks like from there. Some trades that didn't go well was actually 3D got me stopped out. It just gapped up and came down, engulfing pattern. Uh, and this could be a flag. This could be a flag if you move this around, take this out, and just parallel this one. And you can see this might be a flag to the downside, but if it breaks above this high of 82.65, then it's back to the races, and they could squeeze you out again. And remember, this candle isn't closed. So it's half the week, hump day is over. So we'll see what Thursday and Friday give, and we'll kind of go from there. We got Disney pretty much did the same thing. It opened up and then gapped all the way, pretty much gave an engulfing pattern. If we look at the big picture, we see that, right here, right now, it's just maybe testing this line. If you add another parallel line, you can see that it's nice little channel going on right here over the last couple of weeks. So it isn't an uptrend, but it's at the bottom of it. So is it going to be something that's going to go up or down? Only time will tell. Pandora broke down, and if you look here, you can see the lower highs from the shooting star. And it's breaking down below the 10. So this ascending triangle broke above, but it's faded down pretty much, and the volume tapered down a little bit. So let's see where this continues. Again, this candle is not completed, so we have to see what's going on. Jazz is just looks like it's setting up at the end of the day. It is an engulfing pattern, but that's just can't be it. Microsoft has continued to downside. It looks like those guys are selling. Whoever's been holding their shares that we talked about yesterday is selling. So we have to see what's going on with that. Baidu actually, it's still giving you a lower high, but it's just you just have to be cautious. Had a nice strong day, and I would look for this to be setting up back to the long side. So we currently have a shooting star, but we don't know this candle is not completed. So let's see what's going on, and we see that we have some significant levels here. If it can close above and get back, even though and test it and shoot back up, that's good to go, because this is definitely could almost be seen as a cup and handle type of a deal. So we'll pretty much look at those and go from there. Remember, the banking sector didn't look good. This is not looking good. We talked about it yesterday. Continue to the downside. Wells Fargo, continue to the downside. Same thing, lower highs. You can see from here. This is drawn from yesterday, so it did complete it once it got below 10. It got below this area. Goldman Sachs, actually, we talked about that one. It needs to get back above these levels before we start looking at anything, the 172.20, and go from there. This doesn't look that bad. Weekly, it's been in this trash level for a little while, so we got to see if this level is going to continue. Every time it got there, push down. Every time it got in that zone, push down, push down. Is this another push down? Only time will tell. But if it can break up and close above 172.20, that will be a good look for them. Prudential still has this level that we've talked about, which is pretty much this distribution candle from back in 08. And we'll see if we can get above there. That's 129 million, not even close yet. So we'll see what happens, and goes from there. So, and again, it's under the 10, so that's my red light. I'm not looking to get long this until it recaptures the 10 and give me a better setup. So again, your stops are to preserve your capital. You're down 1-2%. That's fine, and that might be on multiple positions. If you're riding your stop up, taking profits out, you might be profitable. It's just you might be just having a runner going on from here. So you just want to be very, very cautious with that. Let's see how this stuff plays out. Let's see what happens tomorrow. Let's see if it gets above those lower highs at least. So remember, we still want to see it get above these lower highs. And that's the tell right here, to see if it can get above that. Unless it gets above that, and if it breaks a lower low, then we have to be cautious, because we're in between the 10 and the 50, and we have to be cautious. So take it from there. If you like what you see, subscribe. If you have any questions regarding any symbols, just put them in the comments, and I'll put them on the next video. Take care.